Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because to figure out what comes next for Bitcoin, we first have to understand how we got here. And it's insane to think that only 2 months ago, Bitcoin was trading below 80,000 and we were talking about how it was at a major support area and that the future looked bright. And here we are just a few weeks later and we've seen an incredible 5-week rally for Bitcoin after bouncing off of that 50-week moving average once again, like it did in August of 2024 and like it did in September of 2023. And now we're celebrating the fact that Bitcoin has finally reclaimed 100K for the first time since January, when only 2 months ago, when we were experiencing extreme fear, we were talking about how it was the lowest coin market cap sentiment print ever, and how markets don't stay at extremes for long. And the same way that we knew extreme greed would eventually end in November of 2024, no matter how optimistic everything looked with the strategic reserve and a pro-crypto president, we also knew that extreme fear would eventually end, even though it looked like the world was ending because of all of the tariff drama and markets going down. And the tough part is always trying to sell or take profits during greed, or at least not FOMO into more risk than you can handle, and buying fear, or at least not panic selling the bottom because of the narratives and headlines at the time. And here we are just a few weeks later and the market is back in the greed region for the first time since January, and we can barely even remember what that extreme fear and those bearish narratives felt like, the same way we couldn't remember what extreme greed felt like when we were at the peak of the doom and gloom and markets were selling off and the media was talking about tariffs collapsing everything and that we're going to go into a multi-year recession immediately. And of course, you can't have a rally without price targets popping up out of nowhere and bullish headlines. This one's talking about, is Bitcoin going to go parabolic, and how Bitcoin price targets include 160K next. And of course, last but certainly not least, the data point that gave us a lot of confidence was the uptrend we were seeing in global liquidity, and we believed it was only a matter of time before Bitcoin followed. So that, combined with the extremely fearful sentiment and Bitcoin sitting at major support, gave us the confidence that it was only a matter of time before Bitcoin would follow this global liquidity uptrend with a lag. And I can already hear all of you typing away on your keyboards. Actually, although this indicator has been incredibly useful for this entire cycle and is yet to be wrong, I watched one YouTube video on this subject, and I now believe that perhaps it's Bitcoin that's leading global liquidity because markets are forward-looking. And now, of course, there is some truth to that. Markets do tend to be forward-looking, but I have a very hard time believing that a retail-dominated risk asset like Bitcoin, whose main use case is as a currency debasement hedge, is somehow able to accurately forecast what central banks globally are going to be doing with their balance sheets, like the Federal Reserve balance sheet, the Treasury General Account, the European Central Bank, and M2 money supplies around the world. I just don't believe Bitcoin investors are competent enough to forecast that, and I think it's a lot more likely, looking at this chart, that you see huge rises in global liquidity and Bitcoin follows suit, huge rise in global liquidity, Bitcoin follows suit, huge rise in global liquidity, Bitcoin follows suit. And believing this and seeing this has worked out for us this entire cycle, so I'm not going to change my mind based on some alternate assumptions, and I'm going to keep using this indicator this way until the market tells us otherwise and it stops working. And now I know what you're thinking, yeah, that's all great and all, but look at how global liquidity always peaks after Bitcoin in every single cycle. So how can you tell me that global liquidity is the one leading? And this is actually very simple, and it's a concept called reversion to the mean. Global liquidity tends to have these very slow and steady increases, while Bitcoin tends to have these very aggressive, huge blow-off tops. So once investors start taking profits very aggressively, they cause Bitcoin to sell off and they cause the bubble to pop way before global liquidity does, because Bitcoin prices in all of that momentum and investors get way too bullish way too quickly, and eventually those higher prices can't be supported and the bubble pops before global liquidity tops. But it's hard not to notice that Bitcoin always bottoms when global liquidity does, and Bitcoin's bull market accelerates once global liquidity sees a breakout. And to me, that makes it very clear that liquidity conditions globally are what's having an impact on Bitcoin and other risk assets. And sometimes those risk assets get ahead of themselves and sell off even while global liquidity is still finishing up its rise. But I have a very hard time believing that Bitcoin investors are able to forecast global liquidity 3 months out with any serious precision. So we'll see what happens. I'll continue monitoring global liquidity because it has been working so well for us so far this cycle. And this is why we don't rely on just one data point. We also look at market sentiment very closely because it tends to be very profitable to take profits while the market is extremely greedy and to buy dips when the market is fearful. And we'll also keep using TA and other valuation metrics to figure out whether or not it's a good opportunity to buy Bitcoin, like its extension from the 200-week moving average. Now, I know these lines are horizontal. They should really be slanted like the 200-week moving average, and maybe I'll turn it into an indicator eventually. But as of right now, Bitcoin is in our expensive region. It's really far from the 200-week, and historically, that means it hasn't been the best time to buy. Now, if you're DCAing and you don't care about price, that's fine. But if you want to FOMO into a leverage long at these prices and think that it's going to go well, the likelihood of that happening isn't that high in my opinion. And it was nice to take advantage of those fair value prices while we could before the market put in this recent rally. I'm much more interested in being patient and managing risk at these prices than I am buying aggressively or going all in. And this is exactly why Monday's free weekly report was called Managing Risk. I took some small profits because my positions are up quite a bit from those March lows, but I still have plenty of upside exposure if this cycle decides to go on a lot longer. And if you'd like to learn about my portfolio system in a more structured way, I still have early bird pricing on the Crypto and Macro Enjoyers program while I build out the mental modules course. But it's hard not to be optimistic when we have a nice range breakout on Bitcoin here. My bias is still to expect more upside, even though there will be pullbacks and chop along the way. We're still seeing a ton of demand coming into these Bitcoin ETFs, and the BlackRock Bitcoin ETF has had a 19-day streak of consecutive inflows. And this is something we've seen very steadily over the past few weeks. We saw some outflows during the panic, but nothing compared to the inflows we saw prior. And that investor demand still looks quite strong for Bitcoin via these spot ETFs. So for now, my base case remains that Bitcoin still has higher to go. I don't know what the exact path will be. That's going to depend on price action. That's going to depend on the data. And that's going to depend on liquidity. So we'll take it 1 week at a time and see how the price action develops. But it's very unlikely to me that this cycle is over based on the price action we've seen and the fact that Bitcoin has been able to hold its 50-week moving average and maintain its bull market structure. So we'll see what happens over the next few months. Right now, we still have global liquidity growth accelerating, and that keeps me bullish on what Bitcoin is going to do over the next few months, especially because this is our third breakout during Bitcoin's price history. Could this time be different? Of course it can, but I would rather anticipate that the same thing is going to happen again and have the market tell me otherwise, because we are still seeing a big devaluation in the US dollar, and that tends to be a very strong catalyst for Bitcoin. It's bouncing as of right now, but it does look like it wants to roll over once this short-term bounce is over. So we're going to see how long and how high this bounce goes before finally rolling over and being a nice tailwind for Bitcoin. The market is still pricing in more and more rate cuts, and although they haven't started yet, this should still act as a tailwind for risk assets. And it does look like quantitative tightening is very close to coming to a stop here. It has almost completely leveled out. And although the Fed hasn't announced that they're stopping quite yet, they should be stopping very soon. And that should remove this downward pressure that we've had on liquidity and risk assets, especially because inflation is headed in the right direction and getting closer and closer to the Fed's target. We also have the labor market weakening as shown clearly here by the unemployment rate, and I think the Fed can only ignore this for so long while inflation is coming down. There's going to be more and more pressure coming from labor market weakness, especially after that negative GDP reading we had in Q1. Although Q2 is estimated to be positive as of right now, I do think there's going to be more and more pressure for the Fed to lower rates and stop quantitative tightening if we see more economic weakness, but we'll have to see how that data develops. It is nice to see the strength we've seen from Bitcoin and the S&P 500 over the past few weeks, and of course we're not out of the woods quite yet. The S&P 500 still hasn't made a new high, but perhaps because Bitcoin moves faster, it could be showing us what's in store for the S&P 500 over the next few weeks. But as always, it's not all sunshine and rainbows. The US stablecoin bill did get blocked as of right now, but I think this is only a temporary hurdle. I still think the future still looks very bright. We heard this week that the SEC is considering new rules easing security token issuance. We saw Coinbase, who perhaps has the best crypto data in the world because of all of their users. They have very clear insights into demand, not to mention all of the investments they make in projects all over the industry. They decided to acquire the options trading platform Deribit, which shows how optimistic they are over what's in store for this industry over the past few months. We still have BlackRock trying to bring staking to their ETFs and still pushing this tokenization narrative. And we have Meta exploring stablecoin integration for payouts. This is only a matter of time for stablecoins, in my opinion. As we get more and more of that regulatory clarity, I think we're going to see a huge explosion in usage over the next few months and years. And speaking of explosions, what an insane rally from Ethereum this week, now facing resistance. We talked about how this false breakdown looked incredibly bullish. It retested the 2017 all-time high. It wicked below 1500. And once we got above that previous range high and psychological round number at 2000, it's no surprise that it exploded to the next major resistance area. Now we have a lot of resistance here to overcome. It was a previous consolidation before the breakdown. All the major moving averages are here, so I wouldn't get too optimistic until it's reclaimed. But if we do see it reclaimed, we could see Ethereum accelerate quite quickly. And after months of doom and gloom articles, the media couldn't help but hop on the bandwagon. Ethereum price finally breaking out, data suggests, is $3,000 next. Ethereum clocks insane 20% candle post Pectra upgrade. Is this a turning point? Ethereum price greenlit for further upside after surprise 29% ETH rally. But what this really looks like to me is Ethereum went back to the 2019 low on its Bitcoin pair. Big investors and whales saw the relative value here when you consider where Bitcoin is relative to Ethereum. And because of that undervalued nature, they decided to allocate, and it likely resulted in a big short squeeze. And these narratives like the Pectra upgrade are just a very convenient thing to point to after seeing such a strong rally. But this is similar to the rallies we've seen in the past when investors have been excited. Now this is a way more important level, but we have to see more follow through and continuation before getting too excited. But it is nice to see my Ethereum bags finally showing some signs of life. Speaking of signs of life, we have Solana trading above its range mid after it had that bullish false breakdown as well below 120. If it closes above the 160 level, we probably see 200 quite quickly. We're seeing very solid liquidity inflows for Solana and a huge boost in DeFi activity. And you can just see the huge inflows coming from other chains to Solana because of the user interface, the user experience, and the cheap fees. And it looks to be putting in a higher low on its Bitcoin pair, which should mean that it would do quite well compared to Bitcoin over the next few weeks, as long as it maintains this higher low structure. So we'll see what happens. It's great to see Ethereum almost back to break even over the past year after being down 50% year over year at one point. And it's sad that break even is our target, but we're going to take this one step at a time. Solana is back well in the green by about 17% over the past year, outperforming the NASDAQ and S&P 500 once again. and Bitcoin up here in a world of its own, up 60% over the past year and significantly outperforming these other four assets. So we'll see what happens over the next few weeks if Bitcoin is able to maintain this close above its range mid. The range high will be our next target. Some chop and consolidation here wouldn't surprise me before the breakout as investors take profit, but I still think we have higher to go over the next few months for both Bitcoin and the S&P 500, especially if we can see the S&P 500 reclaim its major moving averages as well, because this is the last major resistance level before the S&P 500 likely makes it back to new all-time highs. So we'll see what happens in the short term, but as we look forward, the federal government is still running huge deficits, and that trend seems to be worsening, especially because Trump is still talking about things like tax cuts, and it does seem like Doge is a little bit less aggressive than they were a few months ago, but we'll see how that develops. And as long as we keep seeing this national debt expansion, I expect the money supply to expand as well, and that should be quite a bullish tailwind for our popular risk assets like the S&P 500 and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.